Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, another new high for all of the four major indices here: Dow, S&P, NASDAQ, Russell, all hitting new highs. We saw the crude rebound somewhat, actually getting in position, starting to look like it's trying to break out of these 52 evens, a very critical resistance level. We had the gold selling off to some lows, bonds also making new lows here. So we'll see all of this on the charts, but as always, we're starting off our analysis with the S&P 500s. So folks, we still remain in a market in an uptrend. If you haven't noticed, all-time highs. I mean, that's definitely an uptrend to me. One of the things I've just been mentioning is, what I see a lot out there is a lot of what I would call a wall of worry. There's a lot of people still saying that the markets run too far, too fast, historical, overvaluations on PE, or even the Shiller Cape ratio, or whatever it is, right? And what I see out there is, as long as there's negativity on the stock market, it seems like this market is continuing to climb the wall of worry. And you have to have healthy skepticism of a market in order for a bull market to exist. And so far over the last, what is 1, 2, 3, 4, 5, 6 days up in a row, that's exactly what the markets have done. You can see here how we formed this nice little high handle on the S&P 5s right around the 2214s, and we've broken out of that very nicely. And we're at 2259, we'll call it 2260, so that's just 40 points shy of the 2300 whole number. So far, rally is continuing, and one of the things I've just mentioned is, when you're up into free territory, clear air here, like we are in the S&Ps, basically a chart that has never explored these price areas before. These are new all-time highs. Basically, the only thing you can do at this point is just look for any sort of retest of those support levels. We know that markets don't just go straight up. They're going to back and fill at some point in time. Where that is, though, when you're up into new high ground like we are, we just don't know where the sellers are going to come in. So at this point, really, there's no use in really anticipating any sort of tops in here. You just have to let the charts speak for themselves. And the only thing I'm going to say here is, if you ever find yourself underneath these breakout zones right around the 2214s, let's say sometime next week or later on this week, that's where you want to start getting a little bit more defensive. Again, we've talked about, when resistance is broken to the upside, you need to maintain it to keep that breakout intact. So that's all we're seeing here on the S&Ps. NASDAQ also pushing up into new all-time highs. Let's take a look at the daily charts here, right? Getting through those 5400s. Same deal with the NASDAQ. You really don't know where the tops are going to come in, especially when you're in all-time highs, right? There's no previous resistance to gauge where the sellers might step in. So at this point, you just need to maintain these 5400s. That's it. So if you ever find yourself down below these 5400s during the upcoming week, or anytime during the following year, that's where you got to get a little bit more defensive. Okay, so that's just all we've got here on the NASDAQ. All-time highs across the board. And even in fact, on the NASDAQ here, we've got big slow pokey stocks like the Microsoft starting to finally wake up. We actually had a nice little day trade here in our trading room on the Microsoft of all stocks. So it just goes to show you that you still have to look for the stocks that are breaking out of bases, right? We've got a little like flat base going on here, and we're not chasing stocks like, for example, we're not chasing stocks like a steel stock all the way up here that's like 110% away from its 20-day moving average. We just know statistically that's an area that stocks just really don't hang out for very long. They usually pull back in. And so at this point, you just can't trade these. You got to wait for a new setup. I don't know if this is the all-time high for the stock, if it never goes higher than this, but all we know is it's had almost 100% run pre-election, right down here, a little bit of a cup with handle breakout right around these 550s. It's all the way gone up to almost $12 at one point in time. That's over 100% move, folks, in 4 weeks. So we know that stocks like this are probably going to pull in. They're probably going to form some bases, and that's where we got to look at these stocks. But right now, just look for stocks that are forming bases. Just as I've mentioned in previous videos, you got to look for the stocks breaking out of recognizable bases. As we move over to some of our external markets here, taking a look at our crude. Let me just pull in our crude chart here. So here's that crude. Let's pull it up on intradays, getting all the way up, and we actually did a nice little bounce near these support levels. So remember, 49.20s was kind of the resistance. Once we broke it, it becomes support. We couldn't break out of the 52s, which is a much longer, like a year and a half chart pattern resistance level up at the 52s. We backed off, came back down. Where do we find support? Right where we were prior resistance levels. We bounced. We kind of are breaking out of this little high handle, kind of like a ascending, or I'm sorry, a descending trend line. And now we're just looking for a break above these 52.50s. And again, those 52.50s represent about a year and a half long high or bottoming process here called a inverted head and shoulders. So look for a break above that on some volume. I think that that could potentially provide a bid to the energy stocks, the things in the XLE like an Exxon or a Chevron, some of the oil drillers and exploration companies, pipeline companies. They're all going to be beneficiaries of higher oil prices, which should add a boost to the S&P and Dow type names. Taking a look at the gold, here we see the gold continuing to hang out near lows. And so far, folks, I've been mentioning how it seemed like the gold has been sort of losing some of the directional momentum. I've seen some overlapping balances. We just posted some, just by a hair here, some new lows. So we'll see if this maybe can crack some new lows. But at this point, it seems like if we do crack a new low, we'll probably just form a balance that overlaps. So I'm not expecting any huge directional movement, although the longer we stay below these 1200s, the more likely it seems that at some point in the next several weeks or months, 1050 might be a reality if we're just not able to rally these above the 1200s. You can see here that was that last support line here on a weekly chart, and the next support level is coming up at the 1050s. And then finally here, taking a look at the bonds. The bonds coming in, testing some lows again. We've got FOMC minutes coming up, or I'm sorry, not minutes, but the actual rate announcement coming up this Wednesday. So be on tap for that. That could potentially move the bonds here. But, you see how we're coming into these prior lows, congestion area, a lot of trade going on here. This would be an area I would anticipate for the bonds to kind of slow down that directional sell-off that we've been having. And then as we move over to the individual equities here, our swing trades have been just doing great. We've had quite a few nice swing trades, and there's been some things that I wanted to mention on these videos. Is it's very important to have your sell rules in place, because look at what happens here. You get these breakouts sometimes and they just shoot up straight up and they have these nice runs, but a lot of times they'll have some pullbacks along the way. You've got to have some profit taking or risk management protocols in place, because here's what this trade looks like for us. We take this trade right through these 1510s right around this level, and it rips up higher. We get filled on our first profit target on the gap up earlier Friday, and then we get filled on our second profit target right through the spike high, right through the 16 evens, and then it fades all the way back down. But as a trader now, we know that we've already locked down, 2/3 of our profit or our position at a profit. So now we can just let that final third turn into a run, or just let the trade develop. And so this is why it's very important, folks, if you don't have some kind of a rules-based system to take profits, to protect yourself, have sell stops in place, you definitely need to develop one, or just join us for a couple of our webinars on swing trading. We definitely outline the whole system and the strategy in those webinars. Absolutely free for people to join up. So be looking out for announcement on those webinars coming up. Here's another example here of a stock that did this. We're in a swing trade, which is NXST. Same thing, right? We took this trade right through this high handle setup, ran up nicely for 3, was almost going to look like 4 days in a row up, and then it just reversed on us. But folks, we took this trade all the way down in here. We had scale out profit targets along the way, and now we're just sitting on this. Anything extra that we get on this move is just gravy. So that's another one. And one final one, just kind of pointing this out, we've been noticing some of our swing stocks did have some of these reversals. Here's another one, TSEM, right, breaking out of this high handle. We've gotten some of our profit targets filled on this TSEM, kind of having a little bit of a reversal day up here. Expectation on all these stocks that we saw reversals on kind of lower. I mean, over the next few days, that would be my expectation, is maybe sideways to a little bit down. So we'll see if maybe we can hang on to these positions, or maybe we get stopped out. Now, a couple of things I just want to mention is, even though the markets are extended, we're still finding some pretty nice trade ideas. We took one here today, Cisco Foods of all companies, right, breaking out of this high handle that we're seeing here. So again, we're not chasing trades that are extended. We're looking for the stocks that are breaking out of recognizable chart patterns. So I just want to kind of share that with everyone. Again, not as a buy, sell, or hold recommendation on any stocks or any markets that we talk about here in the video. This is all for demonstrative purposes, just to illustrate what traders need to be looking for in terms of chart patterns and how they need to be thinking in terms of risk management and trade management. But other than that, folks, just wishing everyone a great trading day ahead, a great trading week ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.